From a JPMorgan side, I don't think that's in the near-term horizon for us. I think Jamie was pretty clear at Investor Day that we're going to be involved in the trading of that, but custody isn't on the table at the moment. There's a lot of questions around our own risk appetite of how far we want to go down that path from trading and other sides of it, and then custody, I guess, would follow. But naturally, we need custodians, so we're exploring what the right custodians for us for the business footprint that we'll grow.
Hey, what's going up, Bull Runners? Welcome back to the channel. Glad to have you guys here today. Ryan Huggins, aka Win with Ryan. Buckle up because your portfolio is unfortunately bleeding out right now. Bitcoin is teetering on the edge of potentially another free fall. Altcoins are gasping for air, and whispers from Beijing are pulling strings on global markets right now, turning your hard-earned gains into dust overnight. It's not just bad luck. It's a hidden storm engineered to hit where it hurts most, your wallet, your future. With Bitcoin dominance cracking like thin ice and Ethereum holding the last thread, one wrong move from Trump could wipe trillions more out of the market. But there is light slipping past this panic. Ripple just dropped a $1 billion bombshell that's about to unlock real-time liquidity from the world's biggest players, flipping the script from chaos to control. So stick with me for the next few minutes as we break it all down. We're going to be spotlighting the opportunities before they explode and then arm you with moves that could turn this trap into your edge. We're going to head over to X, find out all the breaking news that's happening in the crypto world today. We're going to be heading over to Altcoin Pro and checking in with our top analyst, Curious Jay. We're going to go over a market update for you. Ripple is spending another $1 billion to buy another company. Trump is going to be meeting with Putin. Are they going to be bringing that war to an end as well? And with the government shutdown continuing, all of the reports for this week have been wiped off the board. Looking ahead to next week, will these reports come out? We'll check and see which ones are supposed to be reported on. And so much more in today's video. So if you're like most people where you don't have the opportunity to spend hours a day doing crypto research, well, that's what we do for you on this channel, so make sure you subscribe right now. And if you are still feeling bullish about this current bull run, let us know by commenting 777 down below.
Do you love crypto, but are you worried about taxes shrinking your retirement nest egg? Here's the deal. Trading and selling crypto can trigger capital gains taxes, eating into your wealth. A crypto IRA fixes that. Per IRS publication 590B, traditional IRA gains like those from crypto aren't taxed until distributed. That's why we've partnered with iTrust Capital, a leading crypto IRA company in the USA, to sponsor today's video. And they offer institutional grade custody for retail clients that want to set up their crypto IRAs for retirement, leveraging top storage solutions like Fidelity, Wells Fargo, and Coinbase Prime to keep your assets secure. To get started, simply click the link in the description of this video, sign up for free, and fund your account with cash. They also offer 401k rollovers or crypto transfers, and you can trade 24/7 with just 1% transaction fees and no maintenance costs. As always, I'm not a CPA or financial advisor, so consult one for tax advice, and we do earn a commission if you sign up using our link below to fund your crypto IRA account, but that helps support value-based videos like this. And iTrust Capital already has over 200,000 crypto IRA accounts and over $14 billion in transactions, proving they're trusted by smart investors just like you. So click the link below, get started now by funding your account today, and let's create generational wealth together.
First things first, head over to CoinMarketCap, check out the overall health of the crypto market today. We are trading at $3.66 trillion total market cap. It's down another 2.61% in the last 24 hours. There has been another $222 billion worth of trading volume, all pretty much to the sell side. Fear and greed index continues to bleed out. We're currently sitting at 32 in the fear zone. Altcoin season is really taking a hit. We've dropped all the way now to 27 out of 100. Bitcoin dominance continues to creep up, currently sitting at 58.9, about to break through that 59% level again. Bitcoin ETF has been very dismal this week, having nothing but outflows. $114 million outflow just today, bringing the total week to $338 million with the outflow. Ethereum, on the other hand, is having a mixed bag up and down this week. $177 million worth of inflows today, bringing the total week's calculation to minus $14 million worth of outflows. Top 6 cryptos ranked by total market cap. Number 1, Bitcoin at 108,000. Number 2, Ethereum at 38.97. Number 3 is Tether at $1. Number 4 is BNB at $1,145. And number 5, XRP at $2.32. And wrapping up at number 6, Solana at $184. As we saw in the intro of the video, $4 trillion banking giant JPMorgan, head of markets, just confirmed that the bank will be buying and trading Bitcoin. There's speculation out there right now. The markets are under fire, as we actually know, but Wall Street Journal is reporting that China is intentionally crashing the markets to gain leverage over Trump. And at the same time, U.S. Treasury Secretary Bessent says he's optimistic about the China negotiations that are going on and does confirm that active communication between both sides is going. Also, there was a major announcement just yesterday that India is no longer buying energy from Russia, leaving only China that's actually propping up the Russian government. So economic warfare does continue to wage on, and unfortunately, we are feeling that in the markets today. And the wildest, craziest news yesterday came out when PayPal's PYUSD launched $300 trillion worth of dollar-backed USD stablecoin, which obviously was not real. It was minted to an unknown wallet. Everyone was freaking out on X, but then 20 minutes later, Paxos did burn that $300 trillion PYUSD stablecoin. Now, was this a test for the upcoming liquidity flood into crypto, or was it just a fat finger mistake? Let me know your idea, your opinion down in the comment section below. There was quite the amazing exchange that was happening on X as well. Zero Hedge posted out, the money is not the problem. AI is the new global arms race, and CapEx will eventually be funded by governments, US and China. If you want to know why gold, silver, and Bitcoin are soaring, it's the debasement to fund all these AI projects. Elon Musk responded with true, and that is why Bitcoin is based on energy. You can issue fake fiat currency all you want, and every government in history has done so before, but it is impossible to fake energy, aka Bitcoin. Now, as we saw, there was actually a fake launch of USD stablecoin of $300 trillion. Luckily, that was then removed. But then even deeper on this, we had the old owner of Twitter coming out and saying, yes, agreeing with the new owner of X, Elon Musk, about Bitcoin being energy, and it's based by energy, and it is potentially the one true source of money. Big breaking positive news as well, just in Coinbase will be listing BNB. Now, this is massive. A lot of you guys out there may not have known, but we got two of the biggest exchanges in the world, and Coinbase wouldn't even host the second largest or first largest, depending on the day, exchange's native crypto BNB. And if you've been around long enough, you might also remember this group called the PayPal Mafia. Elon Musk was part of that. Also, Jack was part of that. But you know who else was a part of that? Peter Thiel was a part of that. And take a look at this post by Mert here on X. This is honestly a top 10 most insane clip on the internet. I'm always in awe of it. Peter Thiel predicts crypto, private money, and even DeFi composability in 1999 before even the dot-com crash, emphasis on untraceable private money.
One of the questions is, how do you move from these physical dollars to electronic dollars? I think the basic technology is going to take place on the internet. I think the specific platform in the emerging world is going to be on a cell phone platform. If you look at the numbers, there are about 360 million, about 150 million online desktop-based accounts today. That number is projected to grow to about 350 million in the next 5 years. However, with respect to cell phones, internet-enabled cell phones, they're just getting rolled out right now. They already have some significant penetration in Japan, in Finland, in Sweden. They're getting rolled out in Western Europe, US next year. The numbers are projected to grow from about 10 million internet-enabled cell phones today to about 1 billion in 5 years. In 5 years from now, everybody who is a member of the middle class in the emerging world and in the developed world will have an internet-enabled cell phone. And this sort of a cell, in China, the number is projected to go to something like 300 million cell phones, most of which will be internet-enabled. These people will have access to their bank accounts, and it will be very easy for them to move money into an account in a safe jurisdiction where the banks are not politically controlled, and they will basically be able to completely dollarize the economy. There will be no need to have any rubles or renminbi, and it will be non-traceable. No matter how illegal the Chinese Communist government says it is to hold US dollars, you will have a password on your cell phone, and the only way to stop this process would be literally to shut down the telecommunications network. And that's the kind of choice governments like China, India, some of these other countries are going to face. They will either have to shut down the telecommunications network and make it illegal for you to own a cell phone, or they will have to basically give up the kind of monetary sovereignty they've had and the enormous power that they've been able to wield as a result of this kind of sovereignty over the last many, many years.
So as I mentioned a couple of minutes ago, there is definitely financial warfare going on behind the scenes that you don't even know about. But because you're a genius and you're involved in crypto and you've been doing a lot of this research, you probably are aware of it, actually. And big breaking news, Ripple, we are proud to announce it's acquiring treasury management leader G Treasury. The fusion of Ripple's enterprise crypto solutions with G Treasury, 40 plus years of experience, immediately opens up the multi-trillion-dollar corporate treasury market. Brad Garlinghouse also getting on X, posting about how excited he is for it. He says the past few years has reminded this industry why payments, first and foremost, is the primary use case for crypto. And isn't that interesting how all these stories that have been popping up that we just went over references using crypto as payments and the blockchain? Payments where Ripple first started for exactly these reasons. The infrastructure is complex, siloed, and inefficient, but as we know, perfectly positioned to benefit from decentralized financial technology. He went on to say astounding amounts of cash are trapped in outdated payment systems, creating friction, unnecessary costs, and barriers to entering new markets. G Treasury has been serving some of the most well-known brands for decades, and now together with Ripple, we'll be able to help CFOs manage all of their assets, including stablecoins, tokenized deposits, etc., at scale around the world, as well as put their idle capital to work with repo markets via Hidden Road. So let's take a little deeper dive into this purchase. This deal will give Ripple infrastructure to manage digital assets held in corporate treasuries, including stablecoins, tokenized deposits, which can be used to generate yield for clients, according to the Thursday announcement. G Treasury's corporate treasury management tools, alongside with Ripple's suite of blockchain rails, allows the funds to be accessed 24/7 and sent with near instant settlement in the cross-border transaction. Now, as you know, there's been a lot of talk about how Swift will not be using Ripple's technology. Well, this actually expands services to bid to challenge Swift altogether. And as you know, if you've been following along, there is a potential for Ripple to replace Swift for payment rails. Is this another step in that direction? Well, Ripple continues to ink partnerships with traditional finance companies and digital asset projects alike, committing to several deals in September and October. BBVA, a banking institution from Spain, signed an agreement with Ripple in September, designated the company as BBVA's custodian for digital assets. Asset manager Franklin Templeton, DBS Bank, and Ripple signed a memorandum of understanding in September to launch tokenized trading services on XRPL. Ripple also partnered with Bahrain FinTech Bay in October to offer digital asset custody services and integrate RLUSD dollar peg stablecoins into the country's digital asset ecosystem. Ripple's acquisitions and partnerships in part of the company's broader effort to challenge SWIFT interbank messaging system, the standard protocol used by the world's financial institutions to shift money around the world. Let's take a more macro look at what's going on in crypto here. With trade war fears resurfacing, markets are reacting like they always do during macro stress, selling off. But here's what smart money knows. By the way, if you like really in-depth crypto and world economic information at your fingertips, there's a link down in the description below. Join Altcoin Pro today, where you can get market updates every other day. Earlier this year, when tariffs first returned, fear spiked and it became one of the best buy zones of the year. Today feels very similar. Bitcoin has retraced from 125 to 110,000, then 115, then to 110 again this past week. And that might feel like weakness, but structurally, it's still fine. As long as we don't get a weekly candle body close below $98,000. Bitcoin dominance is also interesting. Despite BTC's pullback, dominance is getting close to that 60%. And historically, when Bitcoin dumps, dominance spikes. That is not happening now. And that signal means that we're likely transition phase, not a breakdown. And when that happens, the next leg up in Bitcoin often leads to a rapid altcoin rotation. As always, Ethereum does control that altcoin narrative. Bitcoin dominance isn't just BTC versus alts in general. It's heavily influenced by Ethereum's price. Until Ethereum has a true breakout above that $5,000 level, Bitcoin dominance won't truly break down, and ETH is the gatekeeper for altcoin season. So if you're watching Bitcoin dominance, you're really watching Ethereum. Now, the strategy and outlook going forward. Bitcoin weekly close above 98,000 equals bullish continuation. Bitcoin dominance weakness during a Bitcoin drop equals stealth accumulation, and an Ethereum breakout will be the true ignition of altcoin season. So watch for Ethereum to break out above 5K. Most are still trying to time alt entries. Meanwhile, positioning before the move is how you actually catch the rotation. Just like 2017, no rush to buy anything until uptrend reversal is confirmed or flash crash sell-offs. And the TLDR on this one, Bitcoin isn't broken yet. Bitcoin dominance isn't spiking, which is unusual. And Ethereum is the hidden variable. And once it moves, altcoin liquidity floods in. And just a quick touch here, red folder news that you need to know about next week. CPI will be on Friday. Also, flash manufacturing PMI and flash sales services. So nothing major. U.S. government data may be impacted by the shutdown, which it has. There's been no reports coming out, which is totally fine. By the way, have you personally been affected by the government shutdown? It's not seeming to really hurt anything in the economy. Government employees are going to be getting paid. It's interesting to see, like, what does the government actually do?
If you have 10K or more in crypto, you're literally giving up an extra $300 per month in passive income. You're giving up on a free 3 to 8% additional monthly yield just because it's sitting on an exchange like Coinbase or Binance and you're being lazy. You're taught to hodl, just wait for price appreciation, and this is costing you thousands of dollars. So let's see what happens here. While your assets are sitting there doing absolutely nothing and inflation is kicking your ass. For example, Ethereum didn't do anything over the course of 3 months. XRP didn't do anything over a whole year. And Solana, same thing. It didn't do anything for an even longer period of time while you sat there making no money. And I'm not saying that these are bad investments. It's quite the opposite, actually. But the smartest investors in the world make their crypto work for them to generate additional yield. And why would you not do that? You're holding these crypto assets anyways. It's like buying a rental property and not renting it out. If you hold on to the property because you believe that it's going to appreciate in value over years, why wouldn't you rent it out so someone else can pay your mortgage while you still get the value appreciation? So it makes no sense to just hold your crypto without earning yield on your idle coins. And if you're just holding your crypto on exchanges like Coinbase, your assets aren't safe. In fact, Coinbase was hacked for $400 million and the hackers bribed Coinbase employees so they could access sensitive user information, demanding a $20 million ransom from Coinbase, which the company refused to pay.
I want to make you aware of a disturbing email that we received recently at Coinbase. It was a ransom note demanding $20 million in Bitcoin in exchange for these attackers not releasing some information they claim to have obtained on our customers. I'm going to respond publicly to these attackers by saying no. We are not going to pay your ransom.
And I even received a letter in the mail saying that my information was included in that hack. So I'm speaking from firsthand experience here, not just an article that I read online. So not only are you leaving free money on the table by not earning yield on your idle crypto, but you're also putting yourself at risk of losing it all, getting hacked, or having your account frozen by keeping your crypto on centralized exchanges. Because if it's not your keys, it's not your crypto. You already know this, so I don't have to tell you. You can't afford to be lazy with your capital. The US is drowning in nearly $40 trillion in debt, so this is your insurance against the system. To learn how you can earn passive income on your coins every single day while protecting your capital from hacks or scammers, my research team put together a step-by-step tutorial for you to start earning yield on your crypto today, and it takes less than 10 minutes to get set up. All you need to do is go to altcoinpro.com after you're done watching this video, create your account, and click on the Start Here lesson under the classroom, and you'll discover how one liquidity pool is earning our members up to 40% yield on digital assets that they already own. Plus, you can go into the DeFi yield picks and see even more opportunities to earn passive income on your coins safe and predictably with complete control and ownership of your assets. You will make significantly more money by being your own bank. And all you need to do is go to altcoinpro.com to get started right now.